Welcome traders to this video analysis where I take a look at the US dollar weakness and discuss whether a retracement or continuation is most likely. The specific pairs on our list: euro dollar, pound dollar, dollar yen, and AUD USD. But before starting, please be aware that this video is intended for a global audience. It may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more on conditions and details as well. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is not advice and is for informational and educational purposes only, and by continuing watching this video, you agree with the risk disclaimer. Starting with the pound USD weekly chart, we can see that pound is rising quickly and approaching the 50 fib of that bearish swing high that we had here so far in prior to that. So we can see still a very bullish candle the last week. If we zoom in, you can see a couple of bullish candles already in a row, except this bearish pin bar, and we are approaching close to that resistance spot, but not quite there yet. So one more push up to hit the resistance at 158.75 is certainly possible when looking at the bullish candles so far. A small retracement of last week's bullish candle certainly possible. So the last week's low is not a level I would expect to be broken, and you can see these highs, these candle highs here. So roughly 155 would be the last bouncing spot here, up to 155.50 that I would expect. So some retracement up down to max 155, 155.50 before bouncing up to 158.75 seems the most logical when looking at weekly candles. Also, when looking at the daily chart, we can see fibbing the swing high, swing low from this particular spot here. We can see minus 272 target being hit at 157.50. Also, if we use this fib from here, we're getting close to the minus 618, which is actually equal to that 50 fib, by the way. So we can see that price is close to a resistance, but now might make a retracement. We had engulfing twins on Friday, so that could mean that we retest perhaps this bottom and seek the support of, for instance, this top that I already mentioned on the daily chart. When looking at the AUD USD, we see kind of a rising wedge chart pattern because of the fact that the resistance has a shallower angle than the support level, and in that case we can see maybe perhaps the AUD USD having some trouble with this uptrend, but it is still in an uptrend, and as price is retracing lower, it could still seek to bounce at somewhere around 79, 78, 75 when it retests the bottom, or even higher at 79.50 when it retests the bottom trend line. So that's something to be aware of. Obviously, at the moment, price action is bearish though when looking at this daily chart, so we can see perhaps the continuation. On the weekly chart, we were talking about the fact that this could be an expanding wedge a while ago, and it did. It fulfilled that. It went all the way from the bottom here and retested the levels that we were looking for. So that expanding wedge has been completed, and you can see that last week did close bullish, but a bit of a wick at top. So when we zoom into the 4-hour chart, you know, the thing is that it is in a bullish uptrend here. You can certainly see that support line up in here, but perhaps with the divergence presence between these tops, in fact, a break to go lower could perhaps occur. But we have to keep an eye on this trend line. It could be very important for a break or bounce spot as it gets lower to 79.50 on the AUD USD 4-hour chart here. Now, before I take a look at the dollar yen and euro dollar, please be aware of the following webinars. We have the lineup of this week: weekly FX recap with Nenet tonight on Monday, as always, taking a look at the euro dollar and others. Then expert opinion with Nenet, news trading simplified. Tuesday, Wednesday mornings, we got live trading labs and Forex strategy coming up with myself. And on Thursday, Nenet and I take a look at candlesticks as triggers Thursday evening as a learning lab. So I hope to see you in one of these webinars soon. Now let's take a look at that euro dollar weekly chart. And you can see, of course, we had a great fall, beautiful trades potentials there to the downside. But then we had a rally here, a retracement rally as expected, because we were not able to break the bottom within a couple of weeks, as we can see here. Failed to break and then rallied up here to make a retracement higher. Last week we had again a bullish candle, and we expected that bullish side when looking at the monthly engulfing twins. We already said there's a potential for that upside, and we have indeed seen that last week. Looking at the fact that the bullish candle is still closing strong, I'm expecting upside to continue, but perhaps after a retracement, just like the pound dollar. So a retracement of last week, which certainly should not break last week's low at 111.25, otherwise the analysis is invalidated, but perhaps probably about halfway that candle, roughly at 112.50 or 113, could be a bouncing spot up to the 38.2 target, 38.2 Fibonacci retracement level at 117. Why do I expect some kind of retracement here? Well, first of all, we have a resistance spot at 115.50. Second of all, 115 is around level. And third of all, when we zoom into the daily chart, we can see that if we fib the first impulse, the very first impulse that was, I think, caused by an FOMC or an NFP here, we see that price hit the minus 618 target. So that is another reason why price could retrace. So we could see some bearish retracement to retest this bottom, but not break that bottom and the weekly low. For instance, here at 112, of course, this is some kind of a support level. If we can even put a fib, a smaller fib from here to here, and you can see that anywhere around 112, 112.50, and 113 could easily be a bouncing spot for a continuation of the uptrend up to 115.50. No, sorry, the actually 117 level, wasn't it, that I mentioned here on the weekly chart? Yes, the 38.2 fib. So that's what I'm looking for, that kind of pattern under your dollar for this week. Of course, it should be noted that the FOMC statement is on Wednesday evening or Wednesday afternoon in the US. So that is, of course, something that can have a high impact on price and could shake things around that are definitely unknown variables here at the moment regarding this weekly analysis, right? So when moving on to the dollar yen, for instance, we can see that we're in a triangle pattern, in a wedge, and that the price is slowing down with its speed of the movement, and it's really kind of in a slow grind to the side, sideways movement here. And looking for a potential break, though, perhaps to the upside, because if you look, of course, at the weekly chart, you can see that clear uptrend that we've had already on this dollar yen for multiple years, recently as well at the end of 2014. But the sideways zone here pretty strong between 122 and 118.50. Going back to the daily chart, I would say a break above this 120.25, 120.50 could be that moment that I say, okay, this triangle is completed and the uptrend could be back into play. Otherwise, I'm not expecting much movement of this week, but I wouldn't expect the bottom here at 118.50 to break. Otherwise, this triangle could turn out to be perhaps a bigger retracement still to the downside. So 118.50 important for the bears and bulls, and 120.50. And in between that, the currency pair is still in a range. That wraps up the video analysis. Thank you for joining. Make sure to take a look at Admiral Markets in social media to find out more about the analysis and all other good info on the site. And hope to see you in the webinar this week, and wish you all happy hunting. Cheers.